Good evening and welcome to this webinar on Giving to Grow in Practice, hosted by the Church of Scotland Stewardship team. My name is Darren Phillip and I'm one of the Church's Stewardship consultants, together with Kate Southern, Fiona Penny and our team leader, Pauline Wilson. Our speaker tonight is Leanne Thompson, Deputy General Treasurer of the Church, who will take us through how the new Giving to Grow system will work. And after Leanne's presentation, she'll be joined on the panel by Anne McIntosh, General Treasurer, and Lisa Erskine, Congregational Finance Manager, to answer any questions you may have. To submit your questions, you can hover your mouse to the bottom of the Zoom window, click on the Q&A button, and this will allow you to type in and send your question. We're also pleased to have Dave Kendall, our Chief Officer, with us this evening, and to have almost 400 of you from across the Kirk taking part. I'm sure many of you will want to share what you hear tonight wider, so in a few days' time, we'll send everyone a copy of Leanne's slides, together with a summary of the questions and answers we receive. A recording of the webinar will also be available for you to watch again. But before handing over to Leanne, I'd like to share a thought about why Giving to Grow matters. In Acts, we're told that the earliest group of believers would sell their property and possessions and distribute the money among all, according to what each one needed. And every day the Lord added to their group those who were being saved. This tiny snapshot of the early church speaks of both giving and growth. Giving by redistributing what they have to where it's needed most, and growth, both numerically and spiritually, in their group. In Paul's second letter to the Corinthians, we see that this giving and sharing didn't just happen between individual Christians, but between churches too. He's writing to the churches in Corinth to ask them to share their resources with the struggling church in Judea. He tells them, "You will be enriched in every way, so that you can be generous on every occasion. And through us, your generosity will result in thanksgiving to God." This service you perform is not only supplying the needs of the Lord's people, but is also overflowing in many expressions of thanks to God. Because of the service by which you have proved yourselves, others will praise God. Paul is saying to the Corinthians that when they share generously with other churches, they will be blessed in their giving, others will be blessed by their gifts, and God will be blessed with an outpouring of gratitude. And again, alongside giving, we have growth. Because of their generosity, others will praise God. Being both Presbyterian and national, with a commitment to take the gospel to every square inch of Scotland, the Church of Scotland, like this early church, shares its resources between congregations. The way we calculate how much each congregation contributes to that sharing changes from the 1st of January to a simpler, more transparent system. And tonight we've gathered to hear the detail about how the new Giving to Grow scheme will operate. But behind each percentage and calculation, behind our contributions, be they big or small, sits the same belief articulated by Paul. In sharing what we have, in giving to the work of the wider church, our congregation is blessed, other congregations are blessed, and God is blessed. And the reason behind it all? To enable the growth of the kingdom of God in Scotland and beyond. Let's pray together. God of the biggest bank and the smallest coin, God of the costliest treasure and the cheapest trinket, nothing is beyond you, nothing is beneath you, for you are the source of everything. Fix then our hearts, our minds, our longings on you, that everything we see and hear and share tonight might draw us closer to you and build your kingdom on earth. In the name of Jesus Christ. Amen. So without further ado, I'll hand you over to Leanne to take us through the main presentation for tonight.
Thank you, Darren, for that introduction. Yes, tonight I'm here to talk to you about giving to grow in practice. Giving to Grow, as Darren said, it's the name of the Congregational Contribution Scheme, and it's replaced the Ministries and Mission Scheme. It was originally approved at the General Assembly in 2021, and the detailed regulations were approved at the General Assembly back in May this year. Next slide, please. So this is what I'm going to talk to you about this evening. The main topics are key changes from the Ministry and Mission system, a recap of the basics, so this is the different components, the ministry here, ministry elsewhere, and shared activities. Then I'm going to talk about the income base and accessible income, where to sort of get more information and how we would like to share with you all your own income base. Next, we're going to talk about the timeline, what to expect, when, and after that, just a bit of a recap on what transition funding is and giving agreements. We're then going to go through 4 worked examples, looking at a linkage and also part-time ministry to help sort of put the theory into practice. We're then going to have a look at the annual statement, which sets out the congregational contribution. This has changed from previous years, and we just thought it would be useful to kind of talk through what the different components are, so you know what to expect. Next, we're going to touch on vacancy and how this works in Giving to Grow. And this also fits in with the kind of the 9th point there, presbytery planning considerations. And then finally, we should have plenty of time at the end to take all your questions. If you could have the next slide. So these are the key changes to the new Giving to Grow system. The first one is that it's based on charge accessible income. So when we're talking about that, I mean, it's still mainly one congregation equals one charge, but there's lots of examples where you've got a congregation that is linked with another congregation, and there are some that have considerably more. I think I had somebody recently ask me about a 7-way linkage. So that would be the charge. And when we're talking about accessible income, under Ministries and Mission, it was a 3-year rolling average, and that's changed. Now, under Giving to Grow, we take the most recent year's accessible income. So for 2023, the most recent year is 2021. Those are the accounts that are up to date right now. So that's what we'll be using to calculate the 2023 contribution. It's also, the third point there, it's based on a cost of minister of word and sacrament. And this wasn't taken into account before under Ministries and Mission. The hall let threshold has changed. Previously, we would take 50% of any hall letting income over 20,000, and this has been reduced to 10,000 under Giving to Grow. There's also no presbytery discretionary allowance under Giving to Grow. But having said that, if you have any unused allowance, this can be carried forward to the 31st of December next year, 2023. And we'll touch on that a little bit later. And the final point, which actually, could be the most important, is that scales are no longer being used to collect a fixed total of contributions. It's based on a calculation. So previously, we could say, we want to collect 42 million from congregations, and we could adjust these scales in order to collect that. Now, what we receive is really based on the number of ministers and also congregational income. It's all linked. Next slide, please. So let me just recap some of the basics. There are 3 components to Giving to Grow. The first there is ministry here, and this is based on the allocated number of full-time equivalent posts of a minister of word and sacrament for your charge. And we calculate that taking 50% of the charge assessable income up until the charge as minister is paid for. So I'm going to talk through this in more detail with some examples later to put it into practice. The second component is ministry elsewhere. And I think this is the one that sometimes people struggle a little bit more with. But again, when we come to the examples and I talk you through it, it begins to make more sense. So ministry elsewhere, it funds other ministry. And you only pay for this if you have the income over the amount needed to pay for the cost of your minister. So we calculate it by taking 30% of what we're calling excess income. And excess income is anything over twice of the cost of the ministry you receive. So if you had a full-time minister of word and sacrament, we're assuming that this costs £45,000. Again, I'll come on to explain a wee bit about more of that later. You would need to have income of over £90,000 in order to pay ministry elsewhere. And then shared activities is a third component, which is definitely my favourite. It takes 10% of total assessable income. And it's probably just worth mentioning that assumption at the bottom relating to the cost of a full-time minister and what that includes. So at the moment for 2022, when we're talking about the cost of one full-time minister of word and sacrament, it's the salary at the top end of the stipend scale. It includes the employer's national insurance, pension contributions, income protection, and death and service benefits. Sorry, I knew there was one I'd forgotten. And basically, we've rounded it to 45,000 for the examples, but the amount for 2023, as you can see from the slide, is still to be confirmed. Now, this will happen, very, very soon. So when we come to do the calculations for 2023, we'll have that information available. Next slide, please. The income base. So the income base is a key component of Giving to Grow calculations. We work out the income base for every congregation, and we add these together in order to create the income base for a charge. And we calculate the income base by taking assessable income from analysis of the congregational accounts. So everybody very diligently every year submits congregational accounts to Stewardship and Finance, and our team, Lisa Erskine, our finance manager, goes through every set and she looks through the accounts and sees what is assessable and creates a kind of schedule, if you like, which sets out all the different elements that form that assessable income. You can kind of generally describe it as income which can be used for the normal purposes of a parish church. Now, the regulations contain a lot more detail on this. There's not really been any major changes from Ministries and Mission. We've just tried to make it more transparent and clearer. So it sets out all the different items, and it also sets out the circumstances in which we take expenses into account, and therefore it's the net income that's included. And we also set out in the regulations what items are excluded, such as legacies and grant income. But as I say, the regulations contain all that detail. I'm not going to run through every single thing tonight, but we will send you a link to the regulations in the follow-up. And the last point there is that it's our intention this year to provide every congregation with a copy of their income-based assessment so that you can clearly see what is being assessed. And we hope to send that out with the pack of information that we normally send out in December, which contains your contribution statement as well. Next slide, please. So this is the timeline. At the moment, we're still on the kind of the top point there, although that's coming to an end. So the 2021 accounts are being assessed, And that process of going through each set of accounts and pulling out the assessable income to create the income base is being done. After this, we'll be able to perform the calculation, and we'll calculate the gross contribution for every congregation for 2023. And these gross contributions, and I'm stressing gross because it is the gross contribution, so there won't be any vacancy allowance or transition funding or any other deductions from that. That will be sent to presbytery in September. And we'll talk a little bit more about transition funding later, so I'm not going to go into that in a lot of detail just now. And then in November, we in Stewardship and Finance, we get back from presbytery the schedule that will tell us what transition funding have been applied, if there's any giving agreements, and if they've applied any of the presbytery allowance which might have been carried forward that I mentioned earlier. And we're going to issue a template for that to make it a little bit easier and to make it more consistent. And then in December, that is when congregations, they'll receive the 2023 contributions, the statement that I'll come to talk through later in the presentation. Next slide, please. So, transition funding. I feel like this is something which people are maybe still forgetting about when I'm speaking to them or having email communications. So this is just really a reminder. And transition funding it's calculated based on the total increases in contributions for congregations from 2022 to 2023. It's really to help congregations who've had an increase in their contribution from ministries and mission to the new system. And it's to help them move to this new system. And as I said before, when we issue the gross contributions to presbytery, we'll also tell them this is the amount of transition funding you have available for the congregations within your presbytery. And then they can choose to allocate, specific amounts to different congregations as they deem appropriate. Now, we require presbyteries to complete this template and return it to Stewardship and Finance by the 15th of November. And if we don't receive it by this date, then we'll just assume that the reductions are applied to bring the 2023 contribution in line with the 2022 contribution. So it's worth bearing that in mind. And the transition period is initially proposed to be 3 years, again, to help this transition to the new Giving to Grow system, but also to align with presbytery planning. And it's funded through the national budget. Next slide, please. Giving agreements. So giving agreements, these are where there's potential for increased giving, and a congregation may choose to enter into a giving agreement to pay additional contributions. Now, this could be to fund a presbytery initiative, or it could be one of the national initiatives. And that's really determined by the trustees of the congregation. These giving agreements will be recorded on the schedule of contributions, which will be issued to presbyteries each September. So if you can imagine, we'll issue a schedule that will say, these are all the gross contributions of all the congregations within your presbytery, and we'll have different columns. We'll have a column for transition funding. If it's appropriate, we'll have a column for any carry forward of presbytery allowance, and we'll also have a column for giving agreements. And this is where presbytery would enter any giving agreements that a congregation chooses to enter into. And that last point there in that slide is quite important, because although we're saying it's an additional contribution, this would be completely separate from your Giving to Grow contribution, your standing order. And we wouldn't want them getting muddled up. So separate arrangements would need to be put in place. It could be that the giving agreement is for presbytery, and in that case, it would go directly to presbytery and it wouldn't come near the national office. So it's important that we enter into a conversation to work out how that contribution is paid if you do enter into a giving agreement. Next slide, please. Okay, I'm going to take you through some examples now. The first one is really broken down just to kind of hammer home the different components and ensure that we all understand what's happening. So in this example, it's one congregation in the charge. There's one full-time minister, and the congregation has assessable income of 100,000 per year. So we take 50% of income, but up to the maximum cost of the minister, which is £45,000. So the ministry here total would be 45,000. Next slide. Ministry elsewhere. Remembering that we take 35% of excess income, which is any income over twice the cost of the minister. So this means we take 35% of anything over £90,000. So there's £10,000 is over £90,000. We take 35% of that. So the ministry elsewhere total is 3,500. Next slide. And then the shared activities, which is a simple 10%, is £10,000. Next slide. So this is just a summary. You can see that the total contribution for this congregation would be £58,500. And you can see the separate components that make that up. Next slide, please. So in this second example, we're still looking at assessable income of 100,000, but the difference is this is made up of 3 different congregations in a linked charge. So how does this work? Well, it's the same calculation in that the total contribution for the charge is 58,500. But instead of that being payable by a single congregation, we need to split it back to each congregation. And the way that we do it is we use the proportion of income that they bring in to the total charge income. So you can see that congregation A has £20,000. That's 20% of the total charge income. So 20% of the total contribution would be payable by them. And the same for congregation B, which brings in 30% of the charge income. 30% of the total contribution would be payable by them. And the remainder, 50%, would be payable by congregation C. So this is how we would split it back, and it's consistent across every linkage, whether it's 2, whether it's 7, it's based on that proportion of income that you're bringing in to the total charge income. Next slide. In this third example, we're now looking at part-time ministry. So it's a single congregation, but they only have 0.5 full-time equivalent minister. They still have income of 100,000. So what would this look like? Well, under ministry here, remember that we take half of the income, but it's up to the cost of the ministry that you receive. So they're receiving 50% of ministry. So the cost of ministry they're receiving is 22,500. So that's the maximum amount that they pay under ministry here. Ministry elsewhere, this takes 35% of excess income being anything over double the cost of the ministry you receive. So it's anything over 45,000. So it's 55,000 is that excess income. And we multiply that by 35%, which gives us £19,250. And then the shared activities, £10,000. So you can see that the total charge contribution here would be 51,750. Next slide, please. And this is an example, again, it's the 50% ministry, but I just wanted to demonstrate what happens with a different income. What happens if you only have 40,000 income? Basically, if you have income that is not sufficient enough to pay your ministry here. So we can see that under ministry here, you pay half of your income up to the cost of the ministry you receive. Well, the ministry they're receiving costs £22,500, but they don't have that. So the maximum they'd pay is half of their income, of the assessable income. So they would pay they'd pay 20,000. Ministry elsewhere, they wouldn't pay anything. They don't have any excess income. So they wouldn't pay anything under that. And then shared activities, they still pay the 10%. So it's a total of 24,000. So hopefully those examples give you enough of a flavour to be able to work out what it may mean in your circumstances. But we'll continue going through things, and by all means come back to this and work through them. And if you have any questions or if things don't make sense, then you can get in touch and we can talk it through more. Next slide, please. So this is an example of the annual statement. Before everyone gets their magnifying glasses out, you're not meant to be able to see the detail on this. We'll break it down in the next couple of slides. This is just really to show you the big picture, in that it's separated into different sections. The top section is the invoice, if you like, setting out how much your congregation will be required to pay. And then that second section is the calculation, explaining, well, how did you come up with this amount? And maybe giving a little bit more context. And then at the very bottom there, there's some notes, which just gives a little bit more detail. Next slide, please. So this is the top half of the statement. You can see that it'll have your charge number and your charge name. So in this example, it's just North and South Church of Scotland, and the congregation number and the congregation name. So this looks like it's a two-way linkage, and this congregation is the south part of the linkage. Now it will start with the gross contribution for the congregation at the top there, and then if appropriate, and it may be that these things aren't deducted for your congregation, that's absolutely fine. So we take off transition funding, any endowment income, and income from glebe rents to get a net contribution. Then again, if appropriate, vacancy allowance is deducted, and that in bold, net giving to grow due for 2023. That's important because that is the amount that you would set your standing order up for. That is the amount that is due from the congregation to us. And then you can see at the bottom there, giving agreement, £10,000. As I said before, separate arrangements would be made for the payment of that. Next slide, please. Now, this is the bit that's a little bit different to what the sort of statement looks like at the moment. And this is by no means final. This is our kind of intention. So it might change a wee bit, but this is generally the information that we will be including. The first bit is the number of full-time equivalent ministers of word and sacrament for your charge. So in this example, there's one minister. And the next line is the cost of a minister of word and sacrament. So at the moment, as I said, it's £45,200, but this is likely to change. And then the line below that is the total cost of ministers and word and sacrament for your charge. So in this example, because there's one full-time equivalent minister, the cost of a minister is the same as the cost of the minister for that charge. But actually, if the full-time equivalent was half a minister, or if it was 1.5 or even 2, then that amount could be considerably different. And then the next section is the different components, and it sets it out for the charge there. So you can see, for this one, ministry here, £45,200. So you can look and say, well, the total cost of the minister of word and sacrament for my charge is £45,200. How much am I paying? £45,200 under ministry here. So I'm paying for the cost of my minister. How much am I paying for ministry elsewhere? £3,360. And how much is the charge contributing to the shared activities? £10,000. And then you get the total charge giving to grow contribution, £58,560. But you'll remember from before that the congregation amount was different. The congregation amount was 14,390. So how did we come up with that amount? And it's this part at the bottom, referring to the income base, which helps us work that out. So you can see that the congregation's annual income base is 25,000 and the charge's annual income base is 100,000. So we take 25% of that 58,500 of the charge Giving to Grow contribution to calculate the contribution for the congregation. So that way, the statement will show you what you need to set your standing order up for, what you're due, but also how that's calculated, how that fits into the wider charge context, which should hopefully make it more transparent and you can understand where we're coming from. Next slide, please. Vacancy. So, generally speaking, vacancy allowance under Giving to Grow is working in the same way as it does now. The allowance is set by the Faith Nurture Forum, and the current rates are £933 per month and £1,082 for a linked charge. So that's staying the same for the moment. And every congregation is required to make a contribution, and that includes if the congregation is vacant. So again, that's the same as it is now. The difference is that the way the contribution is calculated is obviously changed. It's using the Giving to Grow methodology and calculation. And then the vacancy allowance is applied. The reason I've sort of put it in at this point before I talk about presbytery planning is because I feel like a lot of the questions that I'm getting just now relate to, well, what happens if we're vacant, but the presbytery plan has a different number of posts to what we have now? How does that work? What will my contribution be based on? And things like that. So I think it's worth saying that the full-time equivalent used in the calculation for Giving to Grow will only be based on the allocated posts per the new presbytery mission plan if sort of these three things are met. So firstly, the new presbytery mission plan needs to have been approved by the 31st of August, because that's when we're calculating the contributions. It also depends, we need to make sure that any parish adjustment, for example, a linkage in which the full-time equivalent per the plan is based, has happened by the 31st of August. And the last thing is that the number of actual posts in place for the charge at 31st of August is less than that per the plan. I know that that's probably quite confusing. So in the next slide, I've got an example of a question to put that into context, which hopefully makes more sense. Next slide. So this is a question. Yeah. My congregation's vacant. Under the new presbytery plan, we are to be linked with 2 other congregations and have been allocated 1.5 ministers. They each have 1 full-time minister currently. What would our Giving to Grow allocation be based on? So they're basically saying that in the new plan, there's 1.5 ministers, but just now, actually, although they're vacant, there's still 2 ministers within that proposed charge. So if we go through the list of things in the previous slide, we can say, well, has the plan been approved? That's the first thing. But even if it had been approved, would it be appropriate to calculate it based on the 1.5? Well, no, because that linkage doesn't exist yet, so we couldn't apply that. So the linkage doesn't exist. And then actually it fails under the third thing as well, which is, are the allocated posts, do they exceed what is in the plan? Yes, there's 2 still in post currently, and there's 1.5 in the plan. So to answer the question, the allocation when we're calculating the Giving to Grow would be based on 1 full-time equivalent. Next slide, please. And this sort of feeds into other presbytery planning considerations. And I feel like it's very much a hot topic just now, and it's on everyone's minds, especially in this latter half of the year. And it's just worth sort of going through the connection and how Giving to Grow relates to presbytery planning and clarifying a few things I'm hearing. So the first is, I think a lot of people are doing some financial planning, which is great. That's one of the benefits of the new system, is that you're able to calculate it for yourself. And they want to know, well, how do parish adjustments affect my Giving to Grow contribution? If we unite, or if we're in a linkage, or what happens if we dissolve? What happens? And the first thing is that saying that if there's a parish adjustment, we would recalculate Giving to Grow. So for dissolutions, for example, the Giving to Grow continues to accrue until a congregation is actually dissolved. So if a congregation was going to dissolve, say, the 30th of June 2023, there would still be 6 months of Giving to Grow due up until that point. For unions and linkages, we would need to recalculate the Giving to Grow because the income base would have changed. So we need to keep remembering that there's only really kind of 2 key components that you need to know for Giving to Grow calculation. And that is, what's the income base and what is the full-time equivalent? So you should be able to, based on examples that we went through before, work out what your Giving to Grow contribution could look like based under different scenarios to help with this financial planning. And this kind of, the second bullet point there, if you've got differing full-time equivalents of ministry and ministry's development staff, team ministry, how does this impact Giving to Grow? And the one thing that I would say is that it's worth remembering that ministry here is based on ministers of word and sacrament. So MDS, they're funded through the ministry elsewhere element. So depending on how you choose to resource the allocation in the presbytery plan can have an impact on your contribution. For example, if you have 1.5 posts, you might choose a youth worker who's an MDS as your 0.5, or you might choose part-time minister of word and sacrament, and that choice will have an impact on the calculation, but you should be able to work it through. And if you need any help with that, then I'm more than happy to check through calculations or sense check your understanding. The last point there is different building scenarios. So I've had a few questions, which is, do you take account of different buildings where we're in a linkage and one congregation has 2 buildings and one congregation has 1 building? How is this reflected in Giving to Grow? And the answer is, it's not. It's a congregational contribution system, and it's based on charge assessable income and full-time equivalent ministers of word and sacrament. We don't take into account the number of buildings that are there. And then I think I've probably answered this one already, actually. What happens if there's a change in circumstances throughout the year? As I said before, if there's a parish adjustment, we would recalculate. And again, in the same way we do now, if you became vacant or a vacancy was filled, then the vacancy allowance would be applied or disapplied as is relevant. Right, I think that's me. So I will be quiet now, and take some questions.
Well, thank you, Leanne. You've put a lot of work into that. It's not easy trying to present such complex and, in the context where every congregation's in a different position. You've presented that really well and clearly, and thank you for that. We've got some good questions coming in. I think we'll start with a really straightforward one, and I think you have definitely covered this in your presentation. But Sandy asks the question, how do we calculate assessable income? So it might just be worth just repeating really that little bit, saying a little bit more about what happens maybe in the office and how you assess it when it comes in.
Yeah, so assessable income, we get all the accounts in, and for every congregation there's a template which has all the different types of income which is assessable, and our wonderful finance manager, Lisa Erskine, goes through the accounts and sees, how much gift aid is there, for example, what are the donations, and fills it in for every congregation, and it totals at the bottom, how much is accessible. Previously, we would have taken it for 3 years, but as I said, it's changing to just 1 year this year. So it's quite an involved, detailed exercise that we do.
In terms of treasurers and their role in that, Leanne, is there a kind of rough calculation they can do to get an idea, a kind of a sense of where their congregation or charge is going to be placed come January 2023?
So it will definitely help if we're sending out the income base for every congregation this year, then they'll get more of an idea. But really going to the regulations and having a look to see what is accessible, what is excluded, you could probably do that yourself and work out what is accessible.
Lisa, would you like to come in and say a little more here, please? Thanks.
Yeah, there's just one additional thing that may not be available to people is that we also include income from the Consolidated Fabric Fund and also endowment and glebe income. So it's just, congregations can get a handle on that information from what has been received in previous years, but it's just to highlight that as one thing that is not available in the accounts.
Okay, that's great. I think that covers that. For those of you wondering where the questions are, if you want to go into the Q&A button at the bottom of your screen, you'll be able to see these questions coming in. It looks like we've got maybe 16 in so far, so we'll do our very best to get through them. If we don't get to all of them, we'll certainly cover all of them in the material that comes out afterwards. Mike Lees is asking, why can't the assessment be based on free cash flow? This would take care of those cases where the charge is paying a 1-to-1 loan back, for example. I wonder if there's anyone in the panel that would like to tackle this question.
Do you want me to take that one, Leanne?
Oh yes, please.
Give your voice a little break. You've been speaking for a long time. Have a drink of water. The review group looked at a number of ways of doing this and considered that the income-based way, as we've done before, was the fairest. They looked at other denominations as well and to see what they did, but came back to income being the fairest. And I think the problem with using pre-cash is that it's a bit open to interpretation. Plus, I would say it's a bit lumpy. So, cash is obviously one point of the year, the balance sheet date, whereas the income is throughout the year. So your free cash situation could depend on an awful lot of things that are not necessarily appropriate. So that would be my answer to that one. Hope that helps.
Thanks, Anne. There is a similar question further down, which we'll maybe just take just now, if that's okay, from Alexander Shaw, who asks, why are contributions based on income? In our church, there are major repairs needed. So while income might look good, the ability to pay will be severely compromised. Would you like to add something about that?
So again, the group did look at that in quite a bit of detail, actually, but they considered that, again, there are so many different scenarios of expenditure, different trading ventures within congregations and all sorts of things. It would be very hard to use profit as a measure. So again, they came back to using income. Just to encourage people, though, just to say that, if you have any holdings in the General Trustees Consolidated Fabric Fund, we encourage you to get in touch with the General Trustees and apply to use that money if you have it. And also, if you have a restricted fund where money's been raised for a big building project, such as a new roof, then that wouldn't be accessible. But the team can advise about these kind of situations. Help is available. That's the main point to make with repairs.
Thanks, Anne. Do Leanne or Lisa want to add anything there? No, that's great. Thank you. A question from Crispin Longdon. How do congregations apply to presbytery for transition funding?
So it wouldn't be necessarily that they apply. presbytery will be told, this is the total of transition funding you have available. And I guess it's using their kind of local knowledge and understanding of the congregational context within their presbytery to apply that as appropriate. So I guess there's nothing stopping you if you think that you have a case to be made, then you could contact presbytery and explain, especially when presbyteries are changing, you might not feel that, you might have information to share that you think is relevant. So I think that would be okay. But it's not a pot in the same way that the presbytery discretionary allowance was. It is meant for congregations who are paying more under Giving to Grow. That's the intention of it, to help that transition. So it's worth bearing that in mind. But it could be that each presbytery thinks of a different way in which to administer that.
Thanks, Leanne. An anonymous attendee is asking the question that I asked of Leanne earlier today. And I'm not the anonymous attendee, but the question is example 3 correct? I wonder, Catherine, who you can't see, might just bring example 3 up on to the slides again. And I think this is the sort of part-time ministry example. So maybe, Leanne, if 2 of us are asking the question, it's worth just making sure and talking us through worked example 3 again.
Yes. So for example 3, I'm going to get my calculator out. Actually, look, it's 50% ministry. So we would take half of the income up to the cost of the ministry you receive for ministry here. So the cost of minister of word and sacrament is 45,000. They're only receiving half of that, so it would cost 22,500. So that's the maximum for ministry here. So that is correct. Ministry elsewhere, we need to work out the excess income. So to do that, we do 2 times the cost of the ministry they receive. So that's 2 times 22,500. So that's 45,000. And we deduct that from their assessable income. So we deduct that from 100,000. So their excess income is 55,000, and we multiply that by 35%. So that's 19,250. And then shared activity is 10%. So the calculation is correct, but I think the misunderstanding, or what's difficult to get your head around, is that a congregation with 40,000 is paying roughly the same under ministry here as a congregation with 100,000. But that's the point of Giving to Grow. You're paying for the cost of the ministry that you receive. And you go on to pay more under the ministry elsewhere part if you have that excess income. Whereas in the example 4, they didn't have any excess income, so they didn't pay anything under ministry elsewhere. Hope that makes sense.
But we'll be able to cover it in writing and maybe show a bit more of the workings as well in the handout that comes out afterwards. But there's no such thing as a bad question, is there? So thanks for including that one. David Kingan, at present we have no minister and use a locum. We're not allowed to call a minister. How will our contribution be calculated? I wonder. Yeah, Leanne.
So this comes back into the vacancy part that I was talking about. So we would have a look to see, I don't know any information about what presbytery you're in or anything like that, but for congregations who are vacant, we'll have a look to see whether a new presbytery plan has been approved. And then we would take, if it had been approved and there was no linkage that was dependent on that allocation or anything like that, then we would take the new presbytery mission planning full-time equivalent for your congregation, and we would apply that, and we'd calculate the contribution based on that, and then we would apply a vacancy allowance. And we would do that anyway. The basics are we would calculate your contribution and we would deduct a vacancy allowance. And that's until the presbytery plan, I assume, is approved. in which case you would then be able to call a minister.
Kate Duncan is asking, what is the vacancy allowance?
So I think it said for a single congregation, it's £933 per month. So per year, Lisa, correct me if I'm wrong, 11,196. And it's a wee bit more if you're in a linked charge, I believe.
Yeah, just to put a bit more context into that as well, it's just really to cover the cost of the local your local minister to provide a Sunday service and 2 days pastoral cover. It's basically to cover the cost of that salary.
Okay, thanks, Lisa. Karma Fusel is from the International Presbytery, and obviously the arrangements for them are a bit different. Asking if we could provide maybe some example calculations in the material we provide afterwards, to let them see an example of a congregation, for example, supported by the Salvation Trust, and one where ministry costs, oh, it's just disappeared before my eyes. I don't know what that, where ministry costs exceeds the amount used in Scotland.
Yeah, I can maybe just cover that. So Leanne and I can put together a couple of specific examples. The process in the International Presbytery is slightly different for the congregations. It will be the shared activities part that is relevant to those congregations. We can provide a couple of examples of those.
That's great, thank you, Lisa. Brian Fowler is asking if we're to join a grouping arrangement, is the assessment impact the same as in a linkage if congregations are grouped together? Is that going to be treated in the way that a linkage is treated?
That's a good question. So you would look at, it is the way that we do it on the whole is similar. You know, if I was him and I was working out how much would we be paying if we were based as a linkage with this other congregation, or would be based as a union, the process that you go through would be the same. You would work out the assessable income for each of the congregations, add them together, work out your ministry here, ministry elsewhere, and shared activities. But the difference, I guess, is that total for the charge, if you're in a union, that would be based from a single congregation because you'd be united. If it was a linked charge, then it would be split back to each congregation based on how much income they've brought into that charge assessable income. So does that make sense? Whilst the contribution could be the same, it would either be payable from one united entity or it would be split back for two of them under a linkage.
Is that taking into account more informal groupings, Leanne, or is that only in the case of linkages and unions?
So informal groupings, are we talking about local mission churches or? So when we're calculating, when, you know, in a couple of weeks' time, when we come to do the calculation, it's really, we have a list of all the congregations and which ones are in a two-way linkage, three-way linkage, 4, 5, 6, whatever. And that forms our charge. So it's really that we're looking at when we come to do the calculation. And the single congregation list are those that have united.
So in terms of Giving to Grow, it's where there's a formal relationship, a formal linkage or a formal union. There may well be other groupings around, but in terms of the Giving to Grow system, it's where there's been that kind of formal.
Yeah, an actual parish adjustment.
Okay,
yeah.
Thank you. David Smith says, we have limited experienced people with financial planning. Where do we go with this?
I know it's really tricky. I would say, what is it that you're trying to do? If you're trying to work out different scenarios, or if it's budgeting, or if it's just impact of potential presbytery mission plans, then we can help with that. We can review calculations, we can talk through what the different scenarios are, because I do think that for Giving to Grow, the tricky part is the assessable income. But even if you know what it is for last year, so even if you think, well, we're better than last year, we're about the same as last year, we're worse than last year, you can kind of, or you could do it over each of those scenarios and then work out Giving to Grow for each of them. And then you'd have a range and say, well, this is what our best case scenario is and how much we're due. And this is maybe our worst case scenario. So I think it is possible to do it, but it's just maybe having the confidence, but we can certainly help.
Okay. What about a congregation and guardianship? Are there any different arrangements in place?
That's a really good question, actually, and something that I probably should have covered. So for guardianship, the full-time equivalent is based on 0.25. So that's what the calculation will be based on. And then there's the guardianship allowance, which is the same amount as the vacancy allowance. That is applied after that total.
Okay, that's great.
And Leanne, sorry, could I just add that 0.25 full-time equivalent is of a minister of word and sacrament as well?
Yeah.
Because we had some confusion about that earlier.
Thanks, Anne. David Kingan is asking, are we able to find out the assessable income of a charge which presbytery are proposing a linkage with?
Oh, excellent question. I mean, if you're entering into a linkage with another congregation, my instinct is, could you not contact them and ask for that information? Speak to the treasurer and ask. Because everybody wants to know in terms of financial planning, but I think the important thing to remember is that for presbytery mission planning, it's not all about how much you're going to pay under Giving to Grow. You know, the focus should be on mission. And whilst there's a responsibility in relation to sort of financial sustainability, that it shouldn't necessarily be the focus, but I can understand, obviously, as a finance person, needing it for budgeting and financial planning. So I would say the first port of call should be the congregation, because hopefully there should be, if you're going to enter into a linkage with them, there should be some dialogue there anyway.
Excellent answer, yeah, well done. John Anderson is saying, can we get a copy of the template used to calculate assessable income? Is that something we can issue in the paperwork we send out after this?
Yeah, Lisa, would you agree? Is that okay?
Yeah, we can send out a blank template which details all the categories of assessable income. And as Leanne mentioned, our proposal is that when we send out the information in December, that congregations will have their individual calculation that shows the income that we have assessed.
Okay, thanks, Lisa. Alistair Brunton is asking, will your presbytery planning recalculations be made during the year, or do we have to wait to the following year for the recalculation to have effect?
So if there's a linkage or a union, then we would need to recalculate that and reissue it. I'm just trying to think that we wouldn't recalculate it if the full-time equivalent number changed for some reason. But I can't really think of a reason, because we just calculate that once a year at the 31st of August. But then in saying that, if your full-time equivalent number changed, it could be that you're in vacancy or a vacancy has been filled. So in that case, we would still apply the vacancy allowance or, you know, disapply the vacancy allowance. So I think basically that the main changes that are going to happen from presbytery planning are these unions or the linkages. And in that case, yes, we would need to recalculate the contribution.
And that's no different from the current system either. That's what we do currently.
Yep.
Great, thank you. Douglas McHugh is saying, can you remind me, will the figure for 2023 be based on the 2021 accounts? And I think I know the answer, and everyone's nodding at me. Yes, that's correct. That might be the only question I can answer tonight. Florence Proctor, where do we find the regulations concerning Giving to Grow?
We can send out a link to them, but they're on the website. If you just search for Giving to Grow in the taskbar, there's a Giving to Grow page on the website that has the previous webinar that was done kind of at a higher level by Anne, Dave and John Chalmers before the General Assembly. And it has the regulations there, and it has some examples as well. But we can include the link to that in the handout in the follow-up.
Yeah, and we may even put them in full just so that you've got them handy as well. Ian Anderson, what happens if a congregation can't afford the contribution that they're being asked for?
So I would say that in the first instance, you should contact presbytery and make them aware of the situation. The financial regulations specify that you need to get a dispensation from presbytery if you want to cancel your standing order. But, you know, that's a good thing because it means that they're aware and they can support you or understand why this has happened. And it could be that the stewardship team could help. You can get in touch with us as well, and we can just have a chat and work out how we can support you.
Yeah, stewardship team, there's 4 of us on the team. We cover the whole of the country, and there's lots of different ways, very practical things, very creative things, lots of things we can do. Just get in touch with us, have a conversation. We're going to just try and move on because although we seem to be getting through the questions, there are still 24 that we haven't got to yet. So Alistair Brunton is saying, how does having an ordained local minister affect the calculation? So that would be an ordained local minister, a minister that does not receive a stipend. What effect does that have?
So they're not included in the calculation. So ministry here, we're talking about ministers of word and sacrament. So OLMs are not included. And yeah, the ministry elsewhere funds any other kind of ministry that requires payment. And if it doesn't require, if there's no payment required at all, you know, then it's not factored into the calculation anywhere.
So a congregation that had an OLM in the ministry here section, there would be no payment to make, but they may well have to contribute to ministry elsewhere.
So just trying to think, it's a good question. They would definitely pay the shared activities. But yeah, no, because you only pay ministry elsewhere. Sorry, Anne, are you coming?
No, I was just going to say they would still pay certainly ministries elsewhere because it's based on income.
Yeah,
so but it's ministry here, if they would still pay ministry here based on income as well. It just there wouldn't be a cap because they don't have a minister.
If they didn't have any minister at all, I think it's probably quite unusual, but if they didn't have any minister at all, then it means that the ministry elsewhere would be like their full income, if you know what I mean. So it would be double the cost of the ministry they receive, but actually it's their whole income which would be assessable. So 35% of their assessable income up to a maximum, in fact, yeah, of 1.5 times. That would work either. Let me think about that one and put it in a more succinct way.
Well, thank you for asking that question. It's really good to be challenged. Thanks. Linda Shaw is asking, how is investment portfolio income assessed given the financial turmoil? That's Jim Shaw that's asking that.
I can answer that one. Yes, Jim, we basically we're assessing income that's been received by congregations in the year. So obviously with what's happening in the stock market, if congregations are invested in our investors trust, for example, the dividend rates that have been paid out are slightly lower. So what we're seeing coming through is slightly less assessable income in respect of investment income. So very much, I think the answer is based on what the congregation has received during the year.
Thanks, Lisa. Frank is asking, what is endowment income?
So when we talk about, I'll say stipend endowment income, because that is what is applicable to most people. It comes from the sale of glebe land, and units are purchased in the endowment fund, and you earn some income on this, which is deducted from the cost of your congregational contribution. It's not applicable to everybody. So if you've never heard of it, it could be that you've never sold some glebe land. But if you're unsure, then contact us and we can check.
That's great. What percentage of consolidated income is charged? Is it 50%? I'm not sure I understand the question.
Don't follow the question, sorry. No.
Okay, if anonymous attendee would like to resubmit the question, we'll make sure we cover it, and if not tonight, at least in the written handout. Newport-on-Tay, Church of Scotland asks, is the assessable income only based on general fund income, or does it include fabric fund, Sunday school, guild, etc.?
Well, will I answer that question? I think the answer to that question is, in general, fabric income is assessable unless, I think it was maybe Anne that mentioned, if there's a larger capital project, we would take a look to check to see whether or not that income was assessable. We don't assess organisation income unless it is a specific donation to the general funds of the congregation by the organisation. So guild income, for example, is excluded from the calculation, Sunday school income, etc., or any of the other organisations that are run by the congregation consolidated into the accounts.
Thanks, Lisa. We got a similar question sent in by email earlier today, and that was about income from uniformed organisations. Is that included? He also referred to property rental, commission, and life and work costs. So, you know, there are lots of different things.
I think I saw that question, Pauline, because you had passed that to me. So with regards to life and work, we don't assess the income in respect of that as well. Rental income, we assess for hall letting income. Leanne has already mentioned it's the first £10,000 of that is excluded from our calculation, and we will assess property rental income less. So this is one of the ones where we would look at the expenditure. We would exclude any expenditure that is specifically relates to the letting out of that property. I think that answers the question that was submitted earlier today.
Thank you, Lisa. Now, there are a couple of very specific questions in which I think, given the time, we might just need to deal with a few specific examples in the material we send out. So I think I'm just going to pass over those ones at the moment, if that's okay. Gavin Wilkie, monies received from the Consolidated Fabric Fund must be applied to fabric costs. If this income is part of the ministry assessment, none of the fabric income would be available to pay the ministry assessment? Question mark.
I wonder what they mean by monies received from the Consolidated Fabric Fund, because if you draw down money from the Consolidated Fabric Fund, my understanding is that that's not assessed within the income base.
It's not. It's just the only income that is assessable is the actual, effectively the dividend income that's received.
Investment income.
Yeah.
We did a very good webinar on the Consolidated Fabric Fund back in June, and you can watch that if you missed that. It's on our YouTube page, and that goes into a lot more detail about the Consolidated Fabric Fund. George says, what about money regularly given to a separate fund to support overseas mission? Is this accessible for Giving to Grow?
Obviously, I need to you know, we should have a little bit more detail around what the funds are for, but in general, that type of income is not included. So any money that's gifted for other charitable purposes, third-party donations, is not included.
Okay. I think we've maybe covered the next question from Douglas McHugh. Will a linkage or a united arrangement make any difference to the assessment? I think we covered that earlier, but we'll make sure that's clear in the written material. Robert Essen is saying the presbytery discretionary allowance is being done away with. This leaves me thinking that presbyteries and congregations are being discriminated against in favour of central funds, even taking into account funding being directed to new presbyteries. So that's, I guess, a comment rather than a question.
I think it's just worth pointing out that the presbytery allowance actually over-collected. So we took more from congregations to then give it back to presbytery. So the rationale by getting rid of the presbytery discretionary allowance was actually to leave more with presbytery, to leave more locally to do things with. So I think it's a good thing. It's a change in mindset. I can understand why that's confusing, but you should still be able to do the things that you were doing before, especially with the presbytery funding and presbyteries thinking about what they need in order to do all the things that they want to do.
Thank you,
I think it's
Leanne.
also worth saying, Leanne, that the presbytery 5% did benefit central funds in a way, because it helped with overdue debts as well, that presbyteries could set it against that. So we won't have that in future.
Gordon Young makes a point about the increasing cost of energy, and you know, the potential that this will have a significant impact on ability to pay. Any comments on that situation, which is very real?
It's maybe worth saying that we know that it's a very real situation. There's a whole separate stream of work related to, I don't know if they're talking about energy costs for the church themselves or, yeah, so it's difficult. Everyone's in the same situation. I think that we're looking with the general trustees at all buildings as part of the buildings audit that they're doing as part of the presbytery mission plans. So there'll be, I guess, some sort of rationalisation of buildings. And I believe that there was a deliverance at the General Assembly talking about bringing properties up to a minimum requirement in terms of energy performance as well, which should help with that. But it's something that it's ongoing, and it is a concern for everybody in all different levels.
Yeah, and the general trustees can offer the energy consultant to do an energy survey for your building. At the moment, the congregation needs to pay half of that survey, but I believe that's very useful. There's also talk about, what is it called? Warm bank. So we have food banks at the moment. There's talk about having warm banks, which is people grouping together to perhaps worship in one place to cut down on the energy bills, that type of thing. And maybe we could put the link for that in the materials, Pauline, if I send you it.
Yeah, certainly we'll do that. We have lots of questions that we haven't been able to cover in the time available, and we do just like to keep a strict kind of, you know, we like to abide by the time frame that we said we would. So can I just assure everyone that's put in a question that we haven't got to yet, that we will, over the next few days, really work to get through those. We'll issue them to everybody so that everyone can see the answers. Just thank you very much for engaging with the event. We know that there are many more questions even after this that will come to mind. And we would really just encourage you to keep in touch with us, not to stew away and worry about things, but to get in touch with us, to keep the communication lines open. We have had Dave Kendall here, and you know, Dave, it's really great of you to support us tonight with your presence. I don't know if you'd like to add anything to what's been said, or just offer a few words of encouragement to those treasurers and others who are here.
Well, first of all, I'd like to thank all the presenters and everyone for attending, because it's been a good show tonight. And I know there is so much going on across the church at the moment. To have you here and committing your time to this is brilliant. We've had the experts on the screen, and let's be honest, these have been quite challenging questions you've had to answer tonight. So thanks so much for those open and honest responses that you've given, and also the fact that we're willing to follow up, because there are a good few more questions on the screen. So all credit to you guys for showing up and being willing to answer all the questions. But I think it's also shown that there are levels of complexity here that actually, this is exactly the reason we need to have this sort of night. So people have the chance to ask these questions and get really good responses to them. And we'll be able to follow through with lots of material that will help people going forward. So God bless you all for being here tonight. And thanks to the team for what I think has been a wonderful job.
Thanks, Dave. And I think maybe just a word of reassurance that this isn't a one-off thing. We can hold open, you know, surgeries where in smaller groups, maybe with a few presbyteries at a time, where we're just available to deal with your questions as Giving to Grow is introduced and you're working through it. So this isn't a one and only event. So thanks everybody for coming and for engaging, and we look forward to seeing you soon, and we just pray God's blessing on you as you continue to work hard in congregations. Thank you for your faithfulness and your ongoing commitment, and we just pray God's blessing on you tonight. Thanks for coming. Bye-bye.